Welcome back to the Live Off Rents podcast by Spark Rental. As always, I'm your host, Brian Davis, co-founder of Spark Rental. I'm on a journey to reach financial independence, and I want all of you guys to come with me. We run an investment club for passive real estate investors. We meet every month, we vet deals together, we invest together, we go in on these all together, and we get to talk to a lot of really experienced, fun, interesting people in the course of this investment club. And by proxy, we get to have a lot of these people on the podcast, which is really exciting and fun for me. So today we are joined by Brian Burke. He is the author of The Hands-Off Investor, which is a great book, by the way. I just read it recently. And he is the founder of real estate syndication firm Praxis Capital. And Brian, I wanted to talk to you today about the 3 trust circles for investing. This is something that you like to talk about and that I'm excited to hear more about myself. So Brian, take it away.
Yeah, Brian, I learned about the 3 trust circles in investing quite some time ago and started applying this to my real estate investments, both as a passive investor, as I've invested for my own portfolio, as well as how I approach investing as a syndication sponsor when I'm raising money from others. And the 3 trust circles work something like this. And this is going to be applicable to those of you who are on either side of the table, whether you're investing money into passive investments or if you're sponsoring passive investments and raising money from investors. Think about these 3 trust circles and how they'll apply to your situation. So the first trust circle is they have to trust, or the investor has to trust, the vehicle being used to invest in, such as, let's say it's a real estate syndication. You have to trust real estate as an asset class. If you don't trust real estate as an asset class, everything else is an absolute non-starter. So if you're talking to someone, let's say you're trying to raise money and you're doing your so-called elevator pitch, and you're saying, yeah, I buy real estate, I raise money from investors in real estate, and the first thing they say to you is, oh, real estate's like catching a falling knife, or the market is toxic. I would never invest in real estate. How much time do you want to spend with that person trying to convince them otherwise that investing in real estate is a good thing? Probably not a lot of time. So that's first trust circle number 1. They have to trust whatever it is that you're proposing, even if that's building widgets. If they don't like that kind of widget, they're not going to invest in it. If it's a biotech company, you're coming out with the next great breakthrough drug, and they're like, oh, that their drug business is super risky. They don't trust that business, so forget about it. You want to try to start your journey to raising capital from others from a pool of people who already believe in whatever it is that you're doing. And if you're an investor looking to invest your money, look around to areas that you already trust, businesses you already believe in. You can short circuit a lot of the process that way. The second trust circle is they have to trust you. If you're the syndication sponsor, if you're the passive investor, you have to trust them. So this comes down to knowing that the person that's in charge of this investment is qualified, experienced, has relevant experience, a track record, and so on. So if it's back to real estate, if it's a real estate deal, do they have real estate experience? How long? How many deals have they done? Have they gone full cycle? Have they done deals in this particular area? Have they been in the asset class that they're investing in? Or have they only done apartment buildings and now they're presenting you with a hotel opportunity? Have they done the strategy? They're doing ground up development, but all they've ever done before is stabilized Class A multifamily. They don't really have the relevant experience. Look for all those different things to ensure that you trust them. And also think about other less tangible things like, what's the quality of their character? Do they get back to you quickly? Are they responsive? Will they answer every question that you have? All of those different things are really important for you to build trust in this relationship, which, make no mistake, passive investing is a relationship between an investor and a sponsor.
No
and
question.
You want to have that level of trust there. Otherwise, you're wasting your time. And then the third trust circle is they have to trust the deal that you're presenting. Or if you're the passive investor, you have to trust the deal being presented to you. That means that, let's say you love real estate. You think it's a great place to invest. You think that the sponsor team is honest, responsive, answers every question, has all the relevant experience, a great track record, checks all of the boxes. And then they present you this garbage deal in a terrible part of town that's falling down. And you're like, what are you guys doing here? That's not going to get the deal done. So same thing if you flip the script to the other side. If you're a syndication sponsor and you're looking to attract investors, you want to know that the investors are going to trust the deal you're presenting them. That means you want to present them not just a quality asset in a quality location, but you also want to be able to present a quality strategy, tactics and strategy, business plan, be clear in what you're attempting to achieve here, have some data to support your thesis, some third-party rent growth forecast data, occupancy and vacancy data on the submarket, some economic data to support why you want to invest in this area, some stuff about employment sectors so that you can see that there's a diversified economic base. All those different things, you want to present the story really well so that people will trust the deal. So to sum all of this up, the three trust circles, they have to trust the type of asset or type of investment plan. They have to trust the person who's doing it or the company who's doing it, and they have to trust the individual deal. Break any one of those three. You don't have to break all three or even two of three. Break any one of those three, and there's no deal being made here. You're not raising money from that investor, or if you're the investor, you're not investing in that deal. So those three trust circles all have to get satisfied. And if you can have a very successful outcome.
Yeah, no, that makes perfect sense. And I love that visual of these concentric circles of risk, and that everyone needs to feel comfortable with every single one of those levels. So I love that. Brian, in 30 seconds or less, how do you help people, and how can people connect with you if they want to take you up on that help?
Well, I help people by teaching them about passive investing through my book, The Hands-Off Investor, which is available on Amazon or your favorite bookstore, or from the publisher at biggerpockets.com/syndication book. You can reach out to me via our website, which is praxcap.com. That's short for Praxis Capital. It's praxcap.com, or follow me on Instagram at Investor Brian Burke.
Awesome. And, it's also available on Audible to listen to as an audiobook, which is how I consumed it myself, actually, while I work out. So love that. Anyway, Brian, thank you so much for coming on the show today. We really appreciate it. And guys, if you enjoy these quick, focused conversations that we have, please rate, review the show. It makes a world of difference to us. And on that note, we will catch you next time. Wondering how private equity real estate investing works? We get it. A lot of investors are put off by phrases like private equity or real estate syndication, but these completely passive investments are actually a lot easier than buying properties directly, buying properties yourself in your own name. So we offer a free 40-minute class called Hack the Rich, 7 Secrets We've Learned from Private Equity Real Estate. There's not even a sales pitch at the end. We'll show you how to invest in these on your own without any help from us. So go to sparkrental.com/hack to take the free class. And we can't wait to chat about your questions.